Welcome to today's class. I remain your civic education teacher, Mr. Nwosu Uchechukwu. In today's civic education class, we shall be discussing the topic financial education, and our focus will be on e-money. Again, e-money. Are we good to go? What is e-money? E-money, otherwise called electronic money, is money which exists only in the computer systems of the banks and is not held in any physical form. In other words, it involves the use of computers, the internet, and wireless transfers. It is digitally stored as opposed to actual paper or coin currency. This e-money can also be seen or regarded as digital money, electronic money, or what we popularly known as e-currency. Now, the next is the types of e-money. There are many types of e-money, and the first one we have here is direct deposit. Again, direct deposit. This is a practice of depositing directly into someone's bank account rather than through a paper check. Common use of a direct deposit include salary what? Payment. And the next one we have is electronic funds transfer. Again, electronic funds transfer, otherwise called EFT. This is electronic transfer of money from one bank account to another. It is carried out through the computer-based systems of the banks without a direct intervention of bank staff. That is to say, this type of system does not involve the bank staff effort. I hope it's clear. And the next one we have here is what we call the debit card. Again, the debit card. Now, this is an example of a debit card. What is a debit card? This a payment card that deducts money directly from a consumer's account held in bank to pay for a purchase. That is to say, you can make use of this card in doing what? Making what? A purchase. And the next one we have here is called the credit card. Now that's an example of that's a picture of a debit card. Now this card is issued by a financial company giving the holder an option to borrow funds to pay for purchases. It charges interest and are used for short-term financing. Okay, the next one we have here is what we call the bitcoins. Again, the bitcoins. This is a digital currency, otherwise called cryptocurrency. It's important to note that it is not backed by any country's central bank or government, but can be traded for goods and services with vendors who accept bitcoins as payment. This is a picture of a bitcoin. Alright, the next one we have here is called e-wallet. Again, e-wallet. This is the type of electronic card which is issued or used for online transaction made through a computer or a smartphone. It is linked with the individual's bank account to make payment. Now that's a picture of an e-wallet. Now the next one we have here is channels of money. Again, channels of money. There are different channels of money, but we shall be looking at only few of them. The first one we have here is called the automated teller machine. Again, the automated teller machine, otherwise called the ATM. An automated teller machine is an electronic banking outlet which allows customers to complete basic transactions without the aid of a branch representative or a bank worker. In other words, anyone with a credit card or debit card can access most of the ATMs. Now, the next one we have here is called the POS. Again, the POS, which means point of sale terminal. Again, point of sale terminal. Okay, POS terminal is a machine through which debit or credit cards can be used to accept payments for goods and services. It allows a cardholder to have a real-time online access to funds and information in his or her bank account through debit or cash cards. And the next one we have is called mobile money. Again, mobile money. This is the use of a mobile phone to transfer funds between banks or accounts, deposit or withdraw funds, or pay bills. Alright, the next one we have is called the e-what? Transfer. Again, the e-transfer. This is also called the electronic funds transfer. It is the electronic transfer of money from one bank account to another. either within a single financial institution or across multiple institutions via computer-based system without the direct intervention of bank staff. What then are the uses of e-money? There are different uses of e-money, and the first one we have here is that it is used in making payments for purchases. The next one, it is used in making payments for services. It can likewise be used for cash withdrawal, and the last one, it can be used for fund transfer. What then are the advantages of e-money? There are many advantages of e-money, and we shall be looking at them one after the other. And the first one we have here is that it saves time. Again, it saves what? Time. Money transfer between virtual accounts usually takes a few minutes, while a wire transfer or a postal may take several days. Also, it does not involve waste of waiting time in lines at a bank or post office. And the next one we have here, it serves as expense control measure. E-money helps in controlling expenses because it records the history of all transactions, indicating the store and the amount spent, which can be checked at any time one wants. The next one, it ensures safety. When a large amount of money is carried, there is always a chance of it being lost or stolen. E-money is safer than currency in this regard. Every transaction requires one to provide a personal identification number PIN for the payment to be completed. Electronic funds transfers can be more secure than cash or check transaction. All that is needed to be done is to take some simple precautions to make sure that the card or online account is not misused. Alright, the next one we have here is that it attracts low commission. It costs very little to operate on e-money. Next, it is user friendly. It is user-friendly in that there is always opportunity to submit a question or complaint to a support team, which would be attended to within a reasonable time. The next, it is convenient. All the transfers can be performed at any time and anywhere as long as there is internet access. The last one we have here is anonymity. With e-money, there is anonymity. What do I mean by this? It is not the same case with liquid cash or credit and debit cards. E-money transactions mostly happen on the internet through an online gateway where the identity of the payer is secured and behind the screens. The person on the other side receives the payment from the payer but does not necessarily know the identity of the person behind the money paid. All these are the advantages of e-money. What then are the disadvantages? And the first one we have here is what? Restrictions. Again, restrictions. For withdrawal of fund transfer, certain banks may impose limits on the amount or the number of daily transactions. This means that an amount exceeding a certain figure cannot be withdrawn at once, or only a certain number of transactions are allowed per day. While this is taken as a safety measure, some may find it inconvenient. For example, let's assume you need 100,000 naira today and the bank places a limit or restriction that you can only access 50,000. You will discover the fact that you will end up not being able to accomplish a certain purchase or a given task which you have already mapped out for the day. I hope it's clear. And the next advantage here is the risk of being hacked. The personal account information and credit card number of clients is exposed over the internet when transacting online. Now, this leads to the risk of accounts being hacked. Hackers may use a person's identity for fraudulent activity or make huge fund transfer from a person's account, which could mean a huge financial loss for the person involved. I hope it's clear. Now, the worst situation is when the system of processing company has been broken, because this could lead to the leak of personal data on cards and its owners. Even if the electronic payment system does not launch plastic cards, it can be involved in scandals regarding the stealing of client identity. This is simply called identity what? Theft. Now, the next demerit is the problem of transferring money between different payment systems. Again, the problem of transferring money between different payment what system. Usually, the majority of electronic payment systems do not cooperate with each other. In this case, you have to use the services of e-currency exchange, and it can be time consuming if you still do not have a trusted service for this purpose. Next, the lack of anonymity. The information about all the transactions, including the amount, time, and recipient, are stored in database of the payment system. And it means the intelligence agency has an access to this information. This could serve good or bad purpose. And the next demerit we have here is false identity. Yes, that's true. There are no means to verify if the person entering information online is the same person he claims to be. This is because, unlike physical transaction, the individual is not present in person, and one's identity is not verified using a photograph or a physical signature. Mostly, electronic cash transactions are based on what we call cryptographic system. Information being transferred is encoded by means of numeric keys. When the details travel across the web, what happens? The owner of such account is what? Is at risk of losing his or her money. I hope it's clear. And the next merit we have here is what? Additional cost and effort. Some electronic transaction services may require payment of processing fees and the like, thus leading to increased costs. Some systems require set-up fees, while some others enforce a certain number of transactions every month, thereby incurring additional cost and what? Effort. Now, the last one we have here is loss of smart cards. Again, loss of smart card. Now, electronic payments involve the use of smart cards such as credit and debit cards, ATM cards, identity card, among others. This involve the risk of their theft or loss. In case a lost smart card falls in the wrong hands, or if it is stolen, your identity is at the risk of theft, and the money in the account that the card is linked to may be spent by fraudulent users. There are measures to inform the bank about the loss of your card and, and get it blocked. But the time between losing the card and blocking it is critical. What do I mean? Authorized users may carry out transactions in your name during that period. However, in general, the advantages of electronic payment system outweigh its disadvantages, and they have bigger opportunities comparing with those of traditional wire transactions. All right, at this point in time, I would like us to take the following evaluation questions. Hope you enjoyed the class. Number one, what is e-money? Number two, explain any two examples of electronic money. The third one, list any four channels of e-money. The fourth one, state any four advantages of e-money. And the last one, mention any three disadvantages of e-money. With this, I would like to thank everyone for listening. Do have a lovely Christmas celebration. Happy New Year in advance. Love you all. Bye for now.